Hey guys, welcome back to the channel. If you're new, my name is Sean and we make videos about making money simple. In today's video, I want to walk you through a very simple and effective strategy for investing that's great for beginners because number one, you don't have to do much, so it's excellent for the lazy investor. And two, you don't have to dedicate hours doing research on investing. If that sounds good to you, then this investing strategy may be exactly what you're looking for.
Really? That sounds pretty good.
We are talking about the 3-fund portfolio recommended by bogleheads. I'll go over what it is, the advantages and disadvantages, some examples and strategies of a 3-fund portfolio, and finally, who the 3-fund portfolio strategy is best for. Alright, so what exactly is a 3-fund portfolio, aka the lazy portfolio? A 3-fund portfolio is an investment portfolio that's built around 3 funds, and this includes a domestic stock index fund, an international stock index fund, and a bond index fund. These can be mutual funds or exchange traded funds, also known as ETFs. Index funds are a popular choice for a 3-fund portfolio because they can offer a simplified, diversified, low risk, and low cost approach. Before we go into some examples of 3-fund portfolios, let's briefly mention some advantages and disadvantages to a lazy portfolio. First, the 3-fund strategy offers good diversification. You won't have to figure out what stocks to pick from a list of thousands, eliminating the risk of being over-diversified or not diversified enough. Second, when it comes to asset allocation, a 3-fund portfolio offers you simplicity that is largely driven by your risk tolerance, your age, and your long-term goals. The 3-fund portfolio primary asset classes are once again US stocks, bonds, and international stocks. The third disadvantage of a lazy 3-fund portfolio are the low costs or fees associated with it. Costs matter because what seems like just a small percentage fee can really add up and make a large dent in your return. Finally, the last advantage to a 3-fund portfolio is the low risk involved. For example, some financial advisors may be biased in a particular direction towards a particular stock, but with the 3-fund portfolio, that risk is completely eliminated. This is because index funds are passively managed and broadly invested. The 3-fund portfolio is an excellent option. It does have its disadvantages, and I would really be doing you a disservice if I didn't at least mention those.
Just figure that every place had its advantages and disadvantages.
First is its lack of control. What I mean by that is that you are basically tied to the assets these funds are invested in. That might not be a big deal to you, but for those who like a more hands-on approach, a 3-fund portfolio might not be for you.
Not for me.
The second disadvantage is that there is no chance to beating the market, meaning low risk means low returns and you may be able to match the performance of the market, but in general, you'll be more likely not to beat the market. If you want to beat the market, this strategy may not be for you.
For me.
Another disadvantage is that you will be missing other asset classes. For example, investing in commodities like gold or investing in real estate, emerging markets, and small cap stocks would not be an option. The last disadvantage is rebalancing, meaning that you will have to stay on top of the allocation and rebalance accordingly to really maintain your investment goals. So you'll have to know your percentages you want to maintain for each fund. As you may already know, there are tons of investment fund options out there, so you need to do your research. But here are a few examples of the best funds for a 3-fund portfolio. Now, we just looked into Vanguard, Fidelity, and Charles Schwab, but there are so many options out there, and if you like another brokerage or other funds, you obviously have the freedom to do that. Also, just to note, the first 3 are index fund mutual funds. We also did provide an ETF index fund as another option. Now let's glance at the asset allocation strategies, or how much of each fund you might want to consider. As its name really implies, the 3-fund portfolio consists of 3 funds, which, as mentioned earlier, are US stocks, US bonds, and international stocks. If you're outside the US and watching, then the stocks and bonds would be local to your country. While each 3-fund portfolio consists of these elements, the actual allocation across each asset class really can vary. The most common way to set up a 3-fund portfolio is with an 80-20 portfolio, which consists of 64% of US stocks, 16% international stocks, and 20% bonds. This would be a more aggressive 3-fund portfolio. An equal portfolio consists of 33% US stocks, 33% international stocks, and 33% bonds. This represents a more moderate portfolio. A 20-80 portfolio would consist of 14% US stocks, 6% international stocks, and 80% bonds, thus being a more conservative approach. All right, now that we've hit on some of the most common ways to set up a 3-fund portfolio, let's dive into some pro tips for your consideration as you think more about setting up a 3-fund portfolio of your own. First, you're going to want to set clear goals. While the 3-fund portfolio investing strategy is undoubtedly easy, you will want to make sound decisions such as which brokerage you want to work with, how you will allocate assets across different categories, and how much risk you would like to take. Another pro tip is to automate your investments. While it's good to get your account up and running, it's even better to consistently contribute towards it each month. If you struggle with doing this consistently, the easiest way to stay consistent is to automate your deposits and investments. The last pro tip to consider is to make sure to rebalance. If you automate like we talked about, rebalancing your portfolio will be even easier. Rebalancing means you look at asset allocations you are looking for and add to your funds where necessary to stay in alignment with your investment goals. So now that we just learned all about a 3-fund portfolio, let's talk about who a 3-fund portfolio is best for. A 3-fund portfolio is really almost best for anyone. In fact, it might actually be easier to tell you who shouldn't use this strategy than to give you a long list of people who should. This portfolio isn't designed to beat the market, it's actually designed to essentially replicate the market. So if you're happy to accept the long-term market average returns in exchange for less volatility and broad diversification, the 3-fund portfolio has you covered. What do you guys think? Does this seem like a portfolio you might be interested in setting up for your long-term retirement plan? The lazy portfolio sounds pretty nice to me. Here's a quick recap of some examples of 3-fund portfolios as well as some popular asset allocations you may want to consider based on your investment goals and investment needs. There are so many other options, but we just wanted to share a few of the basic mutual fund and ETF index funds to get you started. If you found value in this video, please smash the like button, share with a friend, and get that lazy 3-fund portfolio started. Thanks so much for watching and supporting our channel. We're growing actually and appreciate all the loyal subscribers. Let's keep this community growing. I'm Sean and I'll see you in the next video.